What's up, guys? In this video, I'll be sharing with you guys how you can easily identify Forex market structure. And for those of you that stick around and watch the complete video, I will be sharing with you guys two powerful setups and a game-changing bonus tip that you can use for day trading. Alright guys, so let's get into it. So it's very important for you guys to quickly and easily identify market structure. So the pair that we're going to be looking at today is the Australian dollar versus the US dollar, right? Aussie US, right? So for this presentation purpose, right, you can market structure should be outlined on all time frames. I usually start at the daily and I work my way all the way down sometimes to the 1 hour or the 15, right? It just depends on what the markets are printing. So for this presentation purpose, we're going to go down to the 1 hour time frame. All right, now that we're on the 1 hour time frame, we're going to break down this market structure, right? So first thing that I notice is we have this is actually in the future, right? We're starting on a Monday, right? So we're actually starting right here, right? But the main purpose of this presentation is I want to help you identify market structure, right? So but as we can see, first thing that pops out to my eyes are this head and shoulders, right? So we have head and shoulders. There's the shoulder, head, shoulder, and then we have a breakout to the upside. So first things first, right? So we have a higher high. We have a higher high. Right, after that higher high, we have a higher high, higher low. And it's important for you guys to be to have precision when you're doing your markups, right? So we have a higher high, as we can see, at 10 o'clock on a Thursday evening, Eastern Standard Time. Price broke the most recent high, broke our higher high on this level, right? It broke our higher high. So that's a sign that price is going to continue to the upside, right? We also have a break to the downside at 8 o'clock New York Open, right? So we can look on a lower time, so we can go down to the lower time frames and look for a confirmation that price is going to break down to the downside. But keep in mind the overall trend that we have a higher high, higher low, higher high, right? So the overall trend is to the upside. So we would possibly look for buys in this area, or look for a price to break. I would probably wait for going on to the lower time frame and look for another break, another lower time frame break or shift of structure on a lower time frame to further confirm that price is going to move to the downside. But for the time being, I would look at this as a retracement, as maybe 110 retracement if you're using your Fibonacci, and for price to continue to the upside, right? So for right now, we have a higher high, higher low, higher high. We would just use this as our higher low. All right, let me write this out. So we have a higher high, right? Then we have our higher low. We have a higher high, higher low. Right at 8 o'clock, price pushes to the upside. Now we have another higher high. Price prints another higher high. So this would be our higher high. Now we're gonna look for our lower low. This is the most recent lowest point. This is the lowest point of the market. So this will be our lower low. A higher low. So we have higher high, higher low, right? higher high, higher low, higher high, higher low. All right, we also have a higher high right here as well. Have a higher high. And we also now we have our low, higher low right here. Right, our lowest point would be right here. And in order for the structure to be considered broken, price needs to close below or above that higher low or higher high. For example, this at 8 o'clock Eastern Standard Time on this Tuesday, price closed above our higher high, as you can see with this green candlestick, versus at 1 o'clock in the evening on a Wednesday, price just wicked this it just wicked this higher low. So technically we don't have a shift or a change of structure or a change of character going on right now. We're still bullish until further on the Thursday at 8 o'clock on New York Open. We have a break. We finally have a break, right? We finally have a break. Price failed to break our high. It failed to break our new high, which is right here. All right. Price failed to break our new higher high. It failed to break our new higher high. And it didn't break our new higher high, which is this level right here. It didn't break this zone. Instead, it broke our recent higher low. So we would look for signs. We would look for signs for sales for this New York Open. And I would go down to the lower time frame to do so, right? Or, you know, depending on your trading style, right, you can just look to take a short right here. Your stops being right here. You can easily do a 1-to-1. Look for a 1-to-1. You could have even got a 2-to-1 at this most recent low, as you can see, right? This could have been your take profit 2. This could have been take profit 1. This could have been take profit 2. Your next take profit could have been this zone, this low. The next take profit could have been this zone right here, right? And you could have essentially got an easily 3-to-1. Got an easy 3-to-1. It would have took roughly 24 hours. It would have took 30 hours, so a day and 6 hours for you to reach your 3-to-1 risk to RR, right? But essentially, that's your market structure, right? So let's go ahead and take a look at another example, right? We're gonna do a downtrend this time. Let's see if we can find a downtrend. All right, so we found one for our downtrend. We just went for a little bit further back in the past. So this one's going to be a little bit more choppy, right? So just pay close attention. So we have our lower low. Actually, let me see something. So here's a shift to the downside, right? All right, let's just switch time frames. Let's just go down to the 30-minute. Let's go down to the 30-minute time frame. So we got our shift right here. Right. So bear with me, guys, but so we have a break to the downside. We have our lower low. Remember, we're on a 15-minute time frame, but the same strategy should be used on all time frames, right? I just want to stick with this area because I'm just showing you guys how you can break it down to a lower time frame and scale in and increase your RR, right? Get a better risk to reward. So we have our lower low. This is our lower high. This is our lower high. So we got a lower low, lower high. Price broke our lower low right here. So this is our new lower. So lower low, lower high, lower low. This is our new lower low. Right, it's our new lower low. So if price breaks our most recent lower high, that'll be an internal shift to the upside. That'll be a shift of market structure, right? So then we can start looking for buys. So we have a higher low. So we have a lower low. Price failed to break our lower low. It broke our higher high right here. It broke our lower high right here. So now we can begin to look for buys, right? We can begin to look for buys. We can begin to look for buys. So we have a lower low. So now we have our lower high right here. This is our lower high. So this is our lower high. This is our new lower low. This is our lower. So lower low, lower high, lower high, lower low. Yeah, this is our lower high. This is our higher high. And this is now our higher high. And this is our now higher low. Right, so this is our new higher high. This is our new lower low. Price broke our higher high. We can look for our push to the upside. Right, so we got our continue on our bullish trend. Now we have a higher high, higher low. This will be our next higher high. This will be our next lower low, because this is the last push to the downside before it breaks our most recent high. Right, so we have a higher high. And then we have our higher low right here. Right, and then it just keeps repeating itself over and over until we have a shift in structure. Alright, so we have a higher high right here. Remember, just because we have a wick, that does not mean we have a break of structure. Okay, price has to close above or below our most recent high or most recent low for it to be either continuation of the trend or a reversal of the trend. A signal of a continuation or a signal of a reversal. So now we have our higher high, then we have our higher low. This is our most recent low right here. We have our higher low. Boom. Right, we have our break. This is our most recent higher high. It's our last higher high before we have a reversal. Right. Boom. Price broke our most recent higher low right here. It broke this zone at 10:30 in the morning in the New York session. So this will be our sign that we have a reversal to the downside, right? And remember, the overall trend, if we go back to the 1 hour time frame, we have a break of structure right here, right? So this simply will be our sign to get in, to continue on with our trend to the downside, right? So we have, if you bring out your Fibonacci, if you bring out your Fibonacci, you will see this is probably like a 61.8 retracement, 61, maybe a 78 retracement. And then we would look to get in our entry right here and then target our most recent lower low on the 1 hour time frame, right? So it'll look something like this, right? right? And as you can see, we were like 3 pips away from our take profit. Most likely we probably would have closed out. We would have seen some consolidation right here in this zone. We closed out for a 7-to-1 RR, or a 1-to-7 RR, right? Which is how I get my high risk to rewards, right? So if we go back to the 30-minute, let's see if we can get an even tighter entry, right? So we would have seen this breakout right here at 10 in the morning. We would have seen this retracement right here on this gap. So we would have had our sell limits, right? We could have looked to enter right here. Look to enter somewhere right here. We could even went down further to a lower time frame, right? Just know the higher your risk to reward, the lower your win rate, right? So it just depends, man. If you have a low win rate but a higher RR, you're gonna have to have a strong psychology, right, to combat for that. So we could have looked for our take profit. Like I said, I would have been targeting right here, but realistically, if I would have saw this consolidation, I probably most likely would have gotten out. Especially as we get into London session, right over here. I don't know, but as you can see, either way, we missed it. So London session, we would have got to push to the upside, and then I definitely would have gotten out once we got back over to this area, because we basically did a full retracement back to our entry, and then it came back down again to our consolidation area. So I would have closed out right here. So like I said, our my stop loss would have been somewhere right there, 50% of this wick right here, most likely, or I would have probably ended up scaling in for 2 positions. So either way, it would have been an 8-to-1, 50% of this wick right here. Right, I don't know. Either way, it's a decent trade, man. High probability setup. You got all confluences. You got trend line confluence all the way around, right? So, can I get a drum roll, please? All right, man. For those of you that stuck around throughout the whole video, I appreciate you guys' support, man. I'm gonna drop some fire for you guys, man. For sticking around, I'm gonna include a bonus. All right. Right, and this is a real nice setup, man. This will definitely help you become more profitable, help you gain consistency. Watch this video over and over again until you get it. Back test until you understand, until this stuff is fluent for you guys, right? So whenever we have a break of structure or a reverse, or a break of structure, or a change of structure, or a change of character, what you guys can do is, right, and this is a phenomenal setup, you guys can bring out your Fibonacci extension tool. You can bring out your Fibonacci extension tool, right? So as we mentioned earlier, right, I'm just eyeballing it, right? This looks like we have a break, so we would start from the push. This is where the push started. This is where the push end. I said we was in this probably the 61 to 78% retracement, right? So it looks like we're actually on the 78 to 88.6 retracement. So we could have highlighted this zone and then go down to the lower time frames and look for a shift in market structure, right? We would look for a shift in market structure. So we would have had our higher high, higher low. So we would have looked for a break. We'd have looked for a break of structure in this zone right here. What time is this? This is London. Oh no, this is New York Open, 8:30 in Eastern Standard Time, right? Once we got this break right here in market structure, we could have took out our Fibonacci again, right? Because keep in mind, this is our higher time frame, 78, 88, 68.6 retracement area, right? So this is our golden zone. This is a high probability setup, right? So that's one confirmation. Second, we have our lower 15-minute, we have our lower time frame confirmation, right? As you can see, we're in the uptrend. We have a higher high, higher low, higher high, higher low, higher high. Price failed to break up to break our most recent higher high. So we have but it broke our higher low, and this is a significant sign that price is going to reverse to the downside. So we can I'm actually too far in the future. I'm actually too far, but it's a perfect example, right? So then we can even take out our Fibonacci again right here, right? Start from the impulse move that broke the structure, right? We're in our 50 to 61.8 area, right? Let me highlight it for you guys. And we could have took shorts right here, right? Could have had our sell limits at the 61.8 zone, or it's 50, or as you know, wherever, play around with it, man. Every pair is different. Every pair has different characteristics. Our target take profit could be could be a 61. Take profit one could be our negative 61.8, or our and take profit two. I'm sorry, take profit two could have been our negative 61.8. Take profit one could be our negative 27, right? So either way, take profit one is a 6 to 1, or 1 to 6, or I'm sorry, 1 to 5. Take profit two will be a 1 to 7, right? Risk to reward. So that's one setup, man. That's the bonus, our Fibonacci. How I just wanted to show you how Fibonacci, when congruent with our market structure, how powerful it is, right? So that was a little bit further into the future. So let's look at our most recent retracement, right? So I believe, yeah, so this is where we broke on a 1 hour time frame. This is our first tap into the zone, right? Into our zone here. So the reason why I at least look for price to reach at a minimum above our 50%, right? We're looking for at a minimum 50%. But my key areas, I like the 61.8 and the 78.6. That's my sweet spot, right? If it taps, if you get a rejection, if you get a lot of wick rejections in this 88.6 area, that's even better, right? But like I said, my key zones, my favorite levels are 61.8 and 78.6. So like I said, man, the reason why as you can see, when price comes into this 50% area or the 61.8 area, why we're not taking any sales is because we're waiting for a shift in market structure, right? Waiting for a shift in market structure. So as you can see, we have our higher high, higher low, higher high, higher low, higher high, higher low. All right, let's see if price broke, right? It didn't quite, it almost broke it right here. It almost broke our 15-minute higher low, right? It actually did break it if we zoom in, right? So this could be our first sign for buys, right? But the reason why, I wouldn't probably, what time is this? This is actually 9 o'clock in the evening, right? This is Asia's session. So I definitely wouldn't even be taking this. Not to mention, we have our liquidity. We have some liquidity right here. So I would definitely probably have my look for sales in their London Open, somewhere in this area, London Open or New York Open, right? So I'll look for some sales right there. Possibly look for some sales right here, right? Just because of that liquidity that I mentioned earlier that I saw. Let's see. So price doesn't quite tap into that zone right there. So that would be one area right there. And then I guess the other area I'd be looking for sales is right here. Let me just zoom, extend this real quick. Right. Other area is right there, which you see as it aligns with our 61 in our 61 and 88.6 area, right? So I'll look for sells in that area. So I'll probably have my stop loss. I'll have a position right there, a sell, not stop loss. I have a sell limit order somewhere in this up here. And then, so we have a higher high, higher low, all right, higher high. And then as we break this area, I'll look to add scale in that position with another order in this area right here, right? And like I said, we would be targeting our higher time frame low. So I would have a position somewhere right here. I'm just guesstimating, guys, because I don't want to overload you guys, confuse you guys. Like I said, your best bet is to play around with it. Our most recent high is right here. I'll probably have it somewhere right here. 7 pip stop loss is not bad. Let's just make it 10 pip, right? Because it's a sell limit, so we don't want to get stopped out by the spread or anything like that. Any foolishness, any fake outs. So that would be one position, and then we're targeting our higher time frame low. So we have one position open. We're risking. We have a 1 to 10 risk to reward, and then we have our other position as a 7. So altogether, that's a 17 RR, right? So if you're risking 1%, you're risking 1% to make. Or I'm sorry, if you're risking 1%, you have 2 open positions, so you're risking 2% to make 17%. All right, so that's pretty much it, guys. I hope this video wasn't too confusing for you guys. Last thing before I let you go, I just want to share with you guys, show you what I mean by our lower low area. So this is our target area because this is our most recent low. Once price breaks, so this is if the trade goes, if price goes above this area right here, then we can begin to look for buys and know that price. We have a sign. That's a tell sign that price is going to reverse and the momentum is shifting to the upside. Right now we're in a downtrend, right, based on our market structure on the higher time frame, which is the 1 hour. And we have, like I said, we have our lower low, lower high, lower low, right? So, but our overall structure is still, if it hasn't broken this zone, I'll still be looking for sales. And like I said, this is pretty much our retracement of a 78 to 86% retracement. So I would look for price to come into this zone for our take profit, which as you can see, it did, right? It came all the way down, then it came back into our zone again. So we could have potentially got 2 trades out of this. And as you can see in the past, I didn't even notice this. It did eventually hit our take profit, right? So we can look for, looks like pretty much the market is going to repeat itself. We have another retracement that's about to happen, right? We have another retracement because it broke our higher low. So that means price is going to continue. It's a sign that price is going to continue to the downside. It broke our higher low. And we're going to look for price to reject. We're going to look for some price rejections somewhere in our 78, 61.8 area. And we're going to target our most recent low, which would be right here, right? So it'll look something like this. Our next trade will look something like this. I'm just going to, you know, if you would have been paying attention to this, probably would have had like a tight stop, something like that. And your take profit would have been down here. So it would have been another 1 to 7 RR. All right, guys, that's pretty much it, man. I hope you guys enjoyed. If you guys like this video, make sure you leave a comment, like, subscribe, give me some feedback in the comments, man, and let me know what you guys think, man. Peace.